Most people will work 40 years and retire with almost nothing. Not because they're lazy, not because they're unlucky, but because they spent 4 decades thinking like employees, even though they desperately wanted the life of an owner. I'm going to tell you something that sounds harsh, but will save you decades of financial mediocrity. The employee mindset is a psychological trap disguised as security, and if you don't learn to think differently, you'll discover at 65 that job security and financial security are completely different things. Here's what I mean by thinking like an employee. You trade time for money. You wait for permission to act. You let someone else define what you're worth. You optimize for safety instead of understanding. You celebrate the paycheck but never question the game. Let me give you the brutal truth that no career counselor will tell you. Employment is an excellent income source, but a terrible wealth-building strategy. Employment is designed to compensate you fairly for your time. It is not designed to make you rich. The incentives are perfectly clear once you see them. Your employer pays you enough to keep you from leaving, but not enough to become financially independent. That's not malicious. It's mathematics. If they paid you what you're truly worth to the enterprise, they couldn't make a profit. Show me the incentive and I'll show you the outcome. Now here's where it gets interesting. You can have a job and still think like an owner. You can collect a salary and still build wealth. But you cannot do it by thinking like an employee. The shift isn't about quitting your job tomorrow. It's about understanding the difference between renting out your time and owning something that compounds. Let me explain the psychological tendencies that lock people into employee thinking. First is incentive-caused bias. When you're paid by the hour or the salary, you unconsciously optimize for time spent, not value created. You start measuring your worth in hours instead of outcomes. Second is authority tendency. You defer to your boss, to company policy, to the org chart. You stop thinking for yourself because someone else is paid to do the thinking. But here's the problem. Your boss isn't thinking about making you wealthy. They're thinking about extracting value from your time. Third is social proof tendency. Everyone around you is climbing the corporate ladder, so you climb too. Everyone's celebrating their annual raise, so you celebrate yours. But the herd isn't moving toward financial independence. It's moving toward comfortable dependency. Now, let me show you what happens when you invert the problem. Instead of asking, how do I get promoted? Ask, what guarantees I stay poor forever? The answer is clear. Trading time for money with no ownership, no equity, no compounding assets. If you want to avoid stupidity, stop doing that. Warren Buffett worked for Benjamin Graham at Graham Newman. He collected a salary. But here's what made him different. He thought like an owner while he was employed. He studied businesses obsessively. He saved aggressively. He allocated every dollar like it mattered because he understood compound interest. I practiced law for years. I had clients. I billed hours. But I never thought like a lawyer building a practice. I thought like a capitalist allocating resources. I kept 20% of my mental energy for studying businesses, understanding economics, and making investment decisions. That 20% made me wealthy. The 80% paid my bills. The difference is circle of competence. Your job title doesn't define your competence. Your deep understanding does. You can be employed as an accountant and be competent in real estate economics. You can work in marketing and understand software business models. Competence is what you know deeply enough to make sound judgments. Here's the mental model. Separate your income source from your wealth strategy. Your job provides cash flow. That's valuable. But wealth comes from owning assets that compound. Businesses, real estate, intellectual property, skills that create enterprise value. Don't confuse the two. Let me tell you about Andrew Carnegie. He started as a telegraph operator making $2.50 per week. He could have thought like an employee forever. Instead, he studied how businesses worked. He learned about railroad steel capital allocation. He saved money and bought small ownership stakes. He thought like an owner while working for someone else. Benjamin Franklin was a printer, but he didn't just print. He owned printing businesses. He didn't just write. He owned the publications. He understood that the wealth wasn't in doing the work. It was in owning the system that generated value. That's not employee thinking. That's owner thinking. Now here's the mathematics that changes everything. Employee thinking is linear. You trade hours for dollars. There's a ceiling. You can only work so many hours. You can only charge so much per hour. The function is bounded. Owner thinking is exponential. You build something once and it compounds. You develop a skill that increases your value forever. You acquire an asset that generates returns while you sleep. You create leverage. The function is unbounded. Let me be specific. If you think like an employee, you optimize for the next raise. If you think like an owner, you optimize for building something that increases in value over decades. The employee celebrates a 5% salary increase. The owner compounds at 15% annually on growing capital. Here's where most people fail. They wait until they have money to start thinking like an owner. That's backwards. You think like an owner first, then the money follows. You study businesses before you can afford to buy them. You understand real estate economics before you own property. You develop the mental models first. I constantly see people rise in life who are not the smartest, sometimes not even the most diligent, but they are learning machines. They spend each day trying to be a little wiser than they were when they woke up. That's owner thinking. That's how you build real wealth. Let me give you the opportunity cost framework. Every year you spend thinking like an employee is a year of compounding you'll never recover. Time is the scarcest resource you have. You can earn more money. You cannot earn more time. If you're 30 years old and you start thinking like an owner, you have 35 years of compounding before traditional retirement. If you wait until you're 50, you have 15 years. The difference isn't linear, it's exponential. The early years matter most because they compound the longest. Now here's the inversion test I want you to apply to your own life. What would guarantee you stay financially dependent forever? First answer, never own anything. Second, never develop skills beyond your job description. Third, never study how wealth is actually built. Fourth, follow the herd and seek social approval. If you want to avoid stupidity, do the opposite. Own something, even if it's small. Develop skills that create enterprise value, not just task completion. Study businesses, economics, psychology, mathematics. Think independently about what actually creates wealth. But here's what most people miss. You don't have to quit your job to start thinking like an owner. In fact, a job is often the best place to develop owner thinking. You have stable income. You can take risks with your learning because you're not risking your livelihood. You can study industries from the inside. When Warren and I looked at Say's Candies, we didn't buy it because it was exciting. We bought it because the mathematics made sense. It had pricing power. It had brand loyalty. It generated cash that we could redeploy. That's owner thinking, understanding the economics deeply enough to make sound judgments. The employee looks at See's and sees a candy company. The owner looks at See's and sees a cash-generating machine with a durable competitive advantage. Same business, completely different mental model. That difference is worth millions of dollars over a lifetime. Let me tell you about a psychological tendency that destroys wealth. Deprival superreaction tendency. People are more afraid of losing what they have than excited about gaining something better. They cling to job security even when it's keeping them poor. They fear the risk of ownership even when the risk of staying employed is greater. Here's the rational analysis. What's riskier? Building multiple income streams and owning assets, or depending entirely on one employer who can fire you tomorrow? The employee thinks the job is safe. The owner knows that depending on one source of income is the highest risk of all. Now let me give you the practical framework for transformation. First, while you're employed, study businesses like an owner. Read annual reports. Understand unit economics. Learn how successful companies actually make money. This costs nothing but attention. Second, allocate capital, even small amounts, with owner discipline. Every dollar you spend is a dollar you didn't invest. Every dollar you invest is a dollar that can compound for decades. The habit of thinking like a capital allocator matters more than the amount. Third, build skills that create enterprise value, not just task value. Task value is, I can process these forms efficiently. Enterprise value is, I understand how to improve this entire system. One keeps you employed. The other makes you valuable to any enterprise, including your own. Fourth, study the mental models from multiple disciplines. Psychology explains why people make bad decisions. Economics explains incentives and trade-offs. Mathematics explains compounding and probability. Biology explains complex adaptive systems. You need all of them. Here's what I learned over decades. You don't have to be brilliant to build wealth. You just have to be consistently not stupid. Avoid the big mistakes. Don't trade time for money forever. Don't spend everything you earn. Don't follow the herd into financial mediocrity. Don't confuse activity with progress. The big money is not in the buying and selling, but in the waiting. Employee thinking is impatient. You want the raise now. You want the promotion next year. You want immediate gratification. Owner thinking is patient. You build something and let it compound for decades. I did not succeed in life by intelligence. I succeeded because I have a long attention span. I could focus on the same problems, the same principles, the same mental models for decades, while everyone else chased the next shiny thing. That's the advantage of owner thinking. Let me tell you something about Berkshire Hathaway. Warren and I didn't build it by being the smartest guys in the room. We built it by consistently applying sound principles over 50 years. We avoided stupidity. We understood our circle of competence. We let compound interest work. That's it. Most people never build wealth because they never think past next month. They optimize for the next paycheck, the next vacation, the next car payment. They never ask, where will I be in 30 years if I keep thinking this way? That question changes everything. Here's the test. Look at people 20 years ahead of you in your current path. If they're financially independent and fulfilled, keep going. If they're still dependent on a paycheck and worried about money, change course now. The trajectory tells you everything you need to know. Now let me address the fear that's probably in your mind. But I need my job. I have bills. I have responsibilities. I can't just become an owner overnight. You're right. And you're missing the point. Nobody's telling you to quit tomorrow. Nobody's telling you to take reckless risks. I'm telling you to change how you think while you keep earning. Study businesses while you collect your salary. Build skills while you're employed. Allocate capital, even small amounts, with discipline. The transformation happens in your mind first. You stop seeing yourself as someone who trades time for money. You start seeing yourself as someone who builds compounding value. The external changes follow naturally from that internal shift. Here's what's remarkable about this mental shift. It costs nothing. You don't need permission. You don't need capital. You don't need credentials. You just need to start thinking differently about the relationship between time, value, and wealth. Let me give you a concrete example. Two people work the same job, same salary, same hours. One thinks like an employee, spends the paycheck, waits for raises, hopes for promotions, retires dependent on Social Security. The other thinks like an owner, saves aggressively, studies businesses, acquires assets, builds skills beyond the job description. Same starting point, same income, completely different outcome 30 years later. The difference isn't luck or intelligence. It's mindset. It's mental models. It's understanding how wealth is actually built. Here's the principle from psychology. What gets rewarded gets repeated. Employee thinking gets rewarded with modest comfort and complete dependency. Owner thinking gets rewarded with compounding wealth and independence. The market is telling you something if you'll listen. Now let me give you the economic reality that nobody wants to acknowledge. The gap between workers and owners isn't shrinking, it's expanding. Technology, automation, and globalization reward ownership and scale. If you're still thinking like an employee in 20 years, you'll be competing with artificial intelligence and global labor markets. But if you think like an owner, you use those same forces to your advantage. You own the businesses that deploy technology. You invest in the companies that benefit from globalization. You build skills that can't be commoditized. That's not pessimism. That's rational analysis. Here's the mental model I want you to remember. Inversion. Always invert. Instead of asking, how do I get rich? Ask, what keeps people poor? Instead of seeking brilliance, avoid stupidity. Instead of chasing success, prevent failure. What keeps people poor? Trading time for money with no ownership. Consuming instead of investing. Following the herd. Seeking permission instead of understanding. Not developing skills beyond their job description. That's your checklist for what not to do. Let me tell you about worldly wisdom. You need mental models from multiple disciplines because the real world is multidisciplinary. Business problems aren't just business problems. They're psychology problems, mathematics problems, systems problems. If you only think like an employee in your narrow function, you'll never see the full picture. The lawyer who only knows law is at a disadvantage to the lawyer who understands psychology, economics, and statistics. The accountant who only knows accounting is at a disadvantage to the accountant who understands business models and competitive strategy. Multidisciplinary thinking compounds your value. Here's what I tell young people. Be a learning machine. Read annual reports. Study businesses. Learn mathematics. Understand psychology. Read history. Every mental model you acquire makes you more valuable. Every discipline you master gives you another tool. The best thing a human being can do is to help another human being know more. That's why I'm telling you this. I spent decades learning these principles. You can learn them in hours, but you have to actually apply them. Knowledge without application is just entertainment. Now let me address the real barrier. Most people would rather fail conventionally than succeed unconventionally. They'd rather follow the employee path and end up broke than think like an owner and face social disapproval. That's social proof tendency destroying their wealth. Your colleagues won't understand why you're reading annual reports instead of watching television. Your family won't understand why you're studying businesses instead of pursuing promotions. Your friends won't understand why you're building ownership instead of buying luxuries. That social pressure is real. But here's the truth. In 30 years, they'll still be working. You won't be. In 30 years, they'll be worried about money. You won't be. In 30 years, they'll wish they'd thought differently. You already did. That's the payoff for unconventional thinking. Let me tell you about another mental model that separates owners from employees. The concept of optionality. Employees optimize for one outcome, keeping their job. Owners optimize for multiple outcomes. This investment works, or that one does, or this skill opens 3 different doors. Optionality means you're never trapped. Here's how this plays out in real life. The employee specializes narrowly because that's what the job requires. The owner learns broadly because optionality requires multiple pathways to success. When one door closes, the owner has 5 others. When the employee's door closes, they're starting from 0. Think about what happened during economic disruptions over the past century. Employees with narrow skills and dying industries suffered. Owners with diverse mental models and multiple income streams adapted. The difference wasn't intelligence. It was how they thought about building their position in the world. Now let me give you a framework I call asymmetric opportunity recognition. Employees see opportunities through the lens of their job description. Owners see opportunities everywhere because they understand multiple disciplines. You read the same newspaper, but you see different possibilities. That's the power of owner thinking. When I read about a new technology, I don't just think that's interesting. I think, what business models does this enable? What existing companies does this threaten? Where are the second-order effects? What will be valuable in 5 years that nobody sees today? That's not genius. It's trained pattern recognition. Here's the brutal economic truth about the next 20 years. Artificial intelligence and automation will destroy millions of employee positions. Not because technology is evil, but because technology makes employee thinking obsolete. If your value is doing repeatable tasks, you're competing with machines that don't sleep. But here's the opportunity. Owner thinking becomes more valuable, not less. Machines can't allocate capital wisely. Algorithms can't understand human psychology. AI can't build relationships or recognize complex patterns across disciplines. The skills that make you think like an owner are the skills that can't be automated. Let me be specific about what to study right now. First, understand the economics of different business models. How do software companies make money differently than manufacturing companies? What makes some businesses more valuable than others? This is pattern recognition that compounds over time. Second, study human psychology deeply. Why do people make irrational decisions? What are the predictable errors? How do incentives drive behavior? This knowledge is useful in every domain: business, investing, relationships, personal decisions. It's the ultimate multidisciplinary tool. Third, understand the mathematics of compounding and probability. Most people can't calculate expected value. They can't understand base rates. They can't think in probabilities. If you can, you have an enormous advantage in every decision you make. This is how owners evaluate opportunities. Fourth, learn how wealth is actually built in different domains. Read biographies of people who built businesses. Study how fortunes were made and lost. Understand the common patterns. This isn't entertainment. It's research into what actually works. Here's what most people get wrong about learning. They study their field deeply and nothing else. They become the world's best employee in a narrow domain. But the owner studies everything shallowly first, then goes deep in areas with asymmetric opportunity. It's a completely different strategy. Let me give you an example from my own life. I studied law, but I also studied mathematics, psychology, economics, physics, biology, history. That combination let me see patterns that pure lawyers missed. When everyone else was thinking about legal precedent, I was thinking about incentives, probabilities, and business economics. That multidisciplinary approach didn't just make me a better lawyer. It made me a better investor, a better thinker, a better decision maker. The value wasn't additive, it was multiplicative. Each discipline I understood made every other discipline more valuable. That's the lattice work of mental models. Here's another psychological tendency that traps people: consistency and commitment tendency. Once you commit to being an employee, your brain wants to stay consistent with that identity. You reject information that contradicts it. You rationalize away opportunities. You become trapped by your own need for consistency. The owner fights this tendency consciously. I'm employed today, but that's not my identity. My identity is capital allocator, business analyst, rational decision maker. The employment is just a current arrangement. This mental flexibility is what allows you to see opportunities that others miss. Now let me address something that confuses people: the difference between entrepreneurship and owner thinking. You don't have to start a business to think like an owner. Entrepreneurship is one path, but you can think like an owner while investing in stocks, in real estate, in your own skills, in any asset that compounds. The employee asks, how do I move up in this organization? The owner asks, where can I deploy resources to generate asymmetric returns? These are completely different questions. They lead to completely different lives. And you can ask the owner's question while collecting an employee's paycheck. Here's the key insight. Your salary is seed capital for owner thinking. Every dollar you earn is a dollar you can allocate. The employee sees the salary as lifestyle fuel. The owner sees the salary as investment capital. That difference in perspective is worth millions. Let me give you the final principle. It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent. You don't need genius. You need discipline. You don't need perfect decisions. You need to avoid terrible ones. Stop trading time for money as your only strategy. Stop waiting for permission to build wealth. Stop following the herd into comfortable mediocrity. Stop optimizing for next month when you should be optimizing for the next 30 years. Just stop doing stupid things. Start thinking about ownership, even small ownership. Start building skills that create enterprise value. Start studying how wealth actually compounds. Start allocating capital with discipline. Start learning the mental models from multiple disciplines. Just start doing rational things. Here's the reality. You're going to spend the next 30 years either way. You're going to work, make decisions, spend money, build skills. The question is, will you do it with employee thinking or owner thinking? That choice determines everything. The employee will work those 30 years and have almost nothing to show for it except a modest pension and fading memories of a career. The owner will work those same 30 years and have assets that generate income, skills that create value, and financial independence. Same time invested, same effort expended, completely different outcome. The difference is mental models. The difference is how you think about time, value, and wealth. The difference is whether you see yourself as someone who trades time or someone who builds compounding value. Let me end with this. You cannot think like an employee and build wealth. You cannot trade time for money forever and achieve financial independence. You cannot follow the herd and end up anywhere except where the herd ends up. These are not opinions. They're mathematical certainties. But you can have a job and think like an owner. You can collect a salary and allocate capital like a capitalist. You can be employed today and financially independent tomorrow. The path exists. The question is whether you'll take it. In 30 years, you'll either own something that compounds or you'll still be hoping for a raise. You'll either have assets that generate income or you'll be dependent on an employer. You'll either have built something valuable or you'll have traded your most productive years for modest comfort. The choice is made daily in how you think, not just what you think.